Auction Show listeners, coming to you with Shimon and Alex. And today we're going to have part two of Kristen Ragusin's interview, which was talking about macro, what does money mean, money creation, banks, so really understanding that, having a different view of money than we typically have. But before that, let's talk about the last week news. Uh, I don't know, AI. Shimon said he has a lot of topics. So, Shimon, I'll just turn over to you. How are you?
I am doing fantastic. Just lots of random little topics, but it's interesting that the overarching theme here is that I've been reading a lot about macro recently and like how interest rates, recession, all of the things we've been talking about. And like my feeling is that we are about to enter like a little period of just like sideways action and then kick it up big time for stock indices and for crypto as well. But the one interesting piece of news that I heard yesterday is about real estate. So a lot of the topics about like recession, no recession, how Fed interest rates, it's all about like, will it cause unemployment, right? Will it cause lots of, you know, lots of disruption in the economy? And so, two things that the mainstream is getting wrong. One about unemployment. So, the unemployment numbers are very misleading because COVID caused lots of people to drop out of the workforce. And so basically people retired early or, you know, things like that. And so then suddenly when you look at the normal KPIs that people use to measure unemployment, like there's the surveys, there's like ADP, there's the government, you know, how many people apply for unemployment. So those are like the three main data points. All of them have problems with the methodology because the methodology has never experienced something like COVID before. And so the idea is that we actually gained a lot less jobs than the mainstream media is talking about. And I can link in the show notes the specific podcast that I'm referring to, but it was very interesting to me. I don't know enough about the details to comment on the specific claim, but basically the claim is that CPI is going down much faster than expected. We're just not seeing it yet. And so,
Why? Sorry, can you explain to me why we're not seeing it?
well, because there's a huge lag in many things about the CPI. Like for example, housing, right?
Housing.
It's a big thing, and so when people delay, so housing, when you sell your house, you usually buy another one, and so people are just like delaying selling their house because like now there was a shock with all these interest rates going up. And so if you look at the housing part of the CPI, you don't necessarily see a lot of movement downwards. But like as now people actually have to move and you know things, there was a huge moratorium on mortgages during COVID. So like you could just like stop paying your mortgage and not being evicted. So there was many things. I don't want to like get necessarily into the details because I don't know enough about them. But the overarching theme is that the methodology that we were using to measure unemployment and to measure recessions and to measure all of the things that the Fed usually takes into account when coming up with policy are not as valid in a post-COVID world. And so that's why basically the belief is that we're already in kind of a mini recession. We can get out of it quickly because of many different, it's not a structural thing. It's more like, okay, people will be out of a job, they'll buy less, but then they'll find another job and it will be like a dip. But also the Fed doesn't necessarily have all this information. And so it is expected to come in the next couple of months, which means that they will suddenly say, okay, we can't increase interest rates anymore, and they'll pivot. So that's like one piece. Wanted to hear what you think about it. Um, yeah.
Yeah, look, I don't. It's I'm kind of reacting live. Inflation reaccelerated last month, so we'll see what happens, right? And we'll see what happens with commodity prices.
Wait, what
The
do you mean it reaccelerated last month?
It went to 6.4% from 6.1 CPI. Look at January's print.
Okay.
month over month. It increased by 0.4% instead of the expected 0.1 from what I remember. And
Hmm.
you can call me on this while you're looking it up. So it reaccelerated. Um, the question is, is that a bump and it'll keep going down or not? Right. I think that's one. Two is we have been there are these geopolitical issues outside of the Russia-Ukraine war with oil. We've been depleting our strategic reserves, and uh, that's a problem.
Yeah, so before we get to the strategic reserves, I am seeing very different things for CPI, so I don't necessarily understand. I'm sharing my screen now.
Mm-hmm.
This is from Fred. So the latest one came out in January, right? It was
No, but
lower
if you
than
look
December.
at
So I think what you mean is the year over year is high. So the year over year in December was lower than the year over year in January. That I agree. But like it's still going down, both the core and uh
here, uh, um,
no, actually that's also percent change from a year ago. So like we went down from 6.4 to
look.
6.34.
So, for example, I'm looking at the Hill. I can show you. Consumer prices rose 5.5% in January and 6.4% annually, according to Labor Department's Consumer Price Index. Core inflation, which excludes food and energy, came in at 0.4% on a month-to-month basis and 5.6% annually. This was different than expectations.
Yeah,
So,
5.6 exactly. 5.6 annually for the core, but the in December
so
it was
maybe
5.7 annually. So we're still going down. Like the
so
trend is still in our favor.
So sorry. Yeah, they. I let me correct me when I misspoke. It's not reaccelerating, but it's the last prints, December's and November's beat expectations to the downside.
Okay, so expectations. I agree with you
But
about expectations. I
but
also agree with you about the magnitude of the drop. So what you're talking about is the line here from November to December was steeper than
mhm.
the line from December to January. But the point is that it's still trending down, both for core and for CPI. By the way, I finally understood the difference between core and CPI and why
Mhm.
they separate them. It's because like I knew that the difference was like what you include in energy and so forth, but the idea is that core is what the Fed can affect with policy, and
Yeah.
then the CPI overall minus the core is the part that the Fed cannot affect because it's like global markets and stuff like that. So it's interesting.
Well, where did you hear that all these things are outdated?
Yeah,
Um,
so it was a podcast on the Robert Breedlove's podcast. I'll show it, and it's a guy who's like an analyst, and basically he's very contrarian. So he basically thinks that real estate is not the price of real estate is not going to go down because like there's less houses being built than families are being formed, and that's the one thing that nobody's talking about. That the unemployment is actually worse than the numbers suggest because like again if you look at just like employment as opposed to unemployment claims, the picture is completely different. And basically he says that that will cause the Fed to pivot faster than
well, look,
mainstream media expects.
we're recording this on at 10 a.m. Eastern on Tuesday, March 7th, so a day before we're releasing. Right now, Powell speaking, and he basically just said this is as of 40 seconds ago that the ultimate levels of interest rates are likely to be higher than previously anticipated, and the Fed is prepared to speed up rate rises if warranted by the data. Now, it could be he's just taming the markets a little bit.
If warranted by the data, talk about the biggest cop out.
Sure, but
Like, of course, if warranted by the data, they'll do whatever it takes. The point is, it's like, it's all about the inflation. So if I had to summarize my whole argument, it's all about inflation because like long-term interest rates are actually not driven by the Fed, but they're driven by inflation. That's another thing that he mentioned on the podcast, which is like at the end of the day, when you buy a 10-year bond, you want it to outperform inflation. And so the 10-year bonds and the inflation really, really move in parallel. And so the idea is if inflation goes down faster than expected, then the markets will rip. If the inflation goes down as expected or, God forbid, goes up again or something else, then we're kind of screwed. And the thesis here is that a lot of the deflationary forces, like China reopened, basically inflation is like, if we think about it from first principles, like it's too many dollars chasing too few goods. So you either need to reduce the number of dollars or increase the number of goods, or both, to battle inflation. So we know that they've been reducing the number of dollars very, very aggressively over the last year. And now the number of goods are increasing. And so the overall inflation, I think, should go down. I mean, you see it. Tesla just cut the price of cars. Like, there's many kind of little signals that the craziness of 2021 is kind of normalizing.
Yeah, no, for sure. The question is, what's the shift in spending habits? So, for example, Tesla's cutting the price of cars because we for sure see goods disinflation, but services inflation is still high. So, if you look at, I mean, we can look at this. We can look at for BLS.gov, which is the Bureau of Labor and Statistics, and we can look at what's where is inflation accelerating. So highest inflation, food, right? Let's see, energy. Let's look at commodity services.
Yeah, no, but the point is, which of these things can change, which of these things are permanent. So we'll just have to see. Anyway, the last data point that I want to share about where we're going is about Bitcoin, which is our favorite topic. I will share a chart from one of our favorite Twitter accounts to follow, The Root. So you can see here that for those of our listeners who don't know, Bitcoin has this thing called the halving, which is when the number of Bitcoins issued per block as a reward to the miners is slashed by 50%. It happens every 4 years. So this chart shows the overlay of the halving. So you see this is the first halving, the second halving, third halving, and the fourth halving, which is expected to happen around May of 2024. And you can look at the price action for when we reached 71% of completion towards the halving. And you can see that in all cycles, there was like a drop leading to that, and then a short period of sideways action before a big increase. So see here, sideways action, then big increase, sideways action, then big increase. And here we actually had a lot of sideways action, whether you take FTX or maybe even if you ignore FTX, this little dip here, you see that we've been stuck at this range for quite a while now. So we've been actually stuck at this range since last summer. So almost for a year, we're kind of in this sideways action. And that is very congruent with previous cycles. So hopefully, as we go into the halving, we will increase from where we currently are. What do you think about this data set, Alex?
I mean, this is amazing hopium. You're looking at the same thing happening, or hoping the same thing happens, and theoretically, this is what's encouraging me about Bitcoin and charts like this is that actually outside of the charts, we have these negative news, this FUD. The SEC is coming hard against crypto, and Bitcoin is holding fairly well. I haven't looked today. Let's see what CoinGecko says. Bitcoin is 22.3. I mean, look, it was 23 something. It was like 25. So it's done pretty well. We had a big drop. When did we have a big drop? Here we had a big drop from 23.4 to 22.2 on March 2nd. March 2nd was a straight down drop. I don't remember exactly what happened on March 2nd, but it's
Silvergate. Silvergate is a huge thing.
Silvergate on March 2nd?
Mm-hmm. That was this drop 100% because I was at a party and someone was asking me, "Hey, were you guys affected by Silvergate?" I'm like, "What happened with Silvergate?" Then I look at the Bitcoin price.
Got it. Makes sense. Okay, well that makes sense. But it's holding, fairly. So okay, it dropped $1,000, right? It dropped 5%. It's not, we had other drops before that, and this is taking out. Silvergate is one of the most crypto friendly banks. They have this thing called a Silvergate something network SEN, and it basically was a network of clearances and from USD to crypto among the top exchanges. And so it was an important network because it worked 24 hours and it allowed exchanges to move cash around even off hours. That went down. So on basically the government, the U.S. government's coming after on ramps to crypto, and Bitcoin's holding strong. So there is something to be said. This is towards or at the bottom, or maybe we've seen the bottom. Maybe we'll do a retest to 15 and then come back up. But you're right. We're holding we're holding pretty well in this range, and I think it'll go up soon.
And I was thinking something very interesting about the what you said, this idea of going after the fiat gateways. That thing can only work if there's not enough interest in this other network, because there's so many ways to access the network, even if, let's say, the banks don't agree to wire money to an exchange. There's just so many ways, and
Yeah.
it's like, even when you think of what the SEC is doing in terms of the securities, I think they're so. First of all, I kind of support, not support, but I'm not sure that calling everything that's not Bitcoin a security will be bad for Bitcoin. Like, if it will definitely be bad for exchanges, it will definitely be bad for all these other tokens. But that's my personal opinion. But I'm just thinking, even if I'm wrong and they do call things a security, the path to prevent someone from buying securities that are unregistered was all about the fiat on ramps, if you think about it, right? So, like, it's about the fiat on ramps. It's about the teams operating those companies, right? You can put them in jail, and then there's also about the exchanges that once you got the security, if you can trade it. But think about it: if the security is purely digital and it has no product that they're shipping, no headquarters where people are going to work every day, it's really hard. Even if you call things a security, it's really hard to prevent people from buying it. Because, like, I could go to El Salvador and conduct my business there. And
Yeah, look,
sure, it will prevent the mainstream proliferation of it. But I mean, I'm not sure it's as easy as they think. I think they still don't understand, like, the space with all these regulations.
I disagree with you. I agree with you for
Finally,
sure,
we
but
disagree on something. It's
no, I
great.
mean, I agree in principle, but you're taking away it creates a lot of friction in the space. Not being able to buy it, or going, who's gonna drive and fly to El Salvador?
No, but what if you just wire money to a company in El Salvador that just buys it for you and sends it to your wallet?
Yeah, sure. I mean, this is how crypto used to be bought in 2015 and 2014 and so on, but it creates friction. The mainstream is not going to start wiring money, or, I don't know. It'll take some years to set up these companies, but yes. uh, uh, yeah.
I was just reacting to what you said about the fact that Bitcoin is not dropping, even though all these news are coming out. So
Yeah.
that was my point, which is, like, they overestimate. They're used to playing in their little sandbox where they're the bully that controls all the other kids. Suddenly the kids can go play in another sandbox. And they're like, these blocks are illegal in our sandbox. And then the kids are like, okay, we'll go to the other one and play over there. And then they're like, oh, shit, we're losing, like, authority. That's how I'm
Yeah.
looking at the latest government actions in the crypto space.
And even Bitcoin right now, Powell speaking, I'm looking at the markets. The markets are tanking, 1 to 2%. So you would think that Bitcoin tank 4 or 5%. Typically, it's a higher beta. It fell. It fell by less than that. It fell by, call it from when Powell speaking, 22.3 to 22.265. So $100 off of 20,000, which is what,
Well,
half a
I'm
percent.
seeing 22, yeah. Yeah, I mean, look, it's not, those short-term moves are less
Yeah.
interesting to me. I think one of the big things is that it definitely decoupled a little bit from
It's
the
decoupled. That's
market.
the whole point. That's the whole point. Before we move on, and we should wrap, I do want to say I have a piece of news for you that is completely different than anything we've ever talked about. It's about COVID tests.
Okay.
Okay. So apparently there's a trend which has been confirmed by people close to me who've tried this trend, um, of people getting weeks off of work because they're testing positive for COVID,
Yeah.
but they don't actually have COVID. So the way to trick COVID tests and have it to test positive, apparently instead of mucus, you put in the Monster energy drink in that thing. And you put the Monster or whatever, some sort of other energy drink, into the COVID test and you put it up and it tests positive. So then you got a real positive test, and people are like, "Oh, can't work," and are taking like 5 to 7 or whatever 10 days off of work.
So
Oh
I think what we should do is we should tag the Red Bull team
yeah,
on this episode because there's their campaign. Don't drink Monster. Gives you
yeah,
COVID.
yeah. That's amazing.
The
That only.
marketing guy right here, always thinking of how to, you know.
Oh, it's so good. I love it how COVID became now. The whole thing is a meme now, even the tests. And by the way, this is told to me by doctor friends. So basically, apparently, it's soft drinks, alcohol, or mineral water. If you put any of those in there,
Mineral water?
yeah, we should test it. I don't know, but Monster, I know works for sure, or I've been told, but it definitely works. No more COVID. Shimon, I can't do the pod for 2 weeks. I have COVID. Here,
We're
I'll show you
not
my positive test.
tolerating scamming your employer out of sick days. That's for
No, we are definitely not tolerating this, but it's amazing that this is where we've gone. We've gone from like, mask up. I'll tell you the last thing. Yesterday, I had to take my kid to the doctor, and we get to the doctor's office, and they have like it's just becoming a charade now. They have the dirty and clean pens, and I'm like, guys, I'm judging them. Like, if you're a medical office and you still have dirty and clean pens because of COVID, we figured this stuff out April 2020. Okay, that doesn't work. Then it was like stand 6 feet apart, and I'm like, guys, that was completely arbitrary. Like now during Omicron, and with especially in the U.S. when people are vaccinated and have natural immunity, but everyone's exposed to it multiple times over. And then it was like I come in and the lady was she was something happened on the computer, so she asked before checking in. One person checking me in, she was like, "Just wait a few minutes," and I waited for like 5-7 minutes before checking, so it's quite a long time, just standing there, no mask. And then she's like, "Okay, I'm ready to check you in now. Here, sir, put on a mask." And I'm like, "Wait a second." But for the 5 or 7 minutes that I was standing with no mask, that was okay. But now that she's checking me in already, I have to put on a mask. And I wasn't the only one. People behind me who stood 6 feet apart, she was also maskless when they were walking in. But when they got to the front, they're like, "Okay, put on this mask." I mean, it's like it's become a charade, It's like, oh, but before checking in, I'm not spreading COVID. But after I've checked in, now I should be safe and mask up. It's like have it one way or the other way. But this like it's just a complete charade. Anyway.
I mean, remember when we went to this bar in DC and they were like, you have to put a mask in to enter, and
Yeah,
everybody in the bar doesn't have masks
yeah, yeah.
because they're drinking. And so we asked the doorman, like, but wait, you want us to put on a mask and then take it off as soon as like
We walked through the door
you
5 feet
walk the
later.
door? He's like, no, you have to have the mask on when you order the drink, and only then you can take it off. So then I was like, wait, but that doesn't make any sense. And the guy's like, put your stupid mask on, go to the stupid bar, order your stupid drink, and then just have a good time. Like,
Yeah, just do it. Oh man. All right, with that, let's wrap it here for the news for this week, and we'll turn it over to Kristen in a second.
sounds good.
Hello, Dollar Auction Show listeners. Today we're going to bring back Kristen. And last time, this is be part 2 of the series, but last time we talked a little bit about that, what money is and how money is essentially made from debt. And a great example Kristen uses, and especially in her book, The End of Scarcity, is that a lot of the money that we see in circulation is actually made on the backs of consumers through consumer debt, credit cards, and others, but really mortgage debt. So that you take out money on your house, that money is essentially created out of thin air. You're able to use it when you repay the money. You use a great analogy like a snow globe. It then essentially sucks the money out of the economy. So in our current society, debt-driven society, we need to keep borrowing happening. Which is, by the way, why I believe we cannot keep interest rates high for too long, but we can get there soon potentially. But I wanted to follow up on this on this idea that all the money in our current society is based on debt. And by the way, for the listeners who have missed the first part, we'll create a link down below for the first part with Kristen, so you can go back and catch yourself up on the conversation, because it's a very, very important conversation. But Kristen, again, can you tell me a little bit about, we talked about how money happens on the back of debt. A lot of it is mortgage debt. Has this been the same throughout history? Has something changed when we, for example, in the US got off the gold standard? How was it before? And then I really want to explore the fact that you need to keep on creating debt to keep on creating money. And what does that mean for us in the long run?
Yeah.
So has this been the same? Has this changed?
It's changed. So this is totally relatively new. I mean, in the past 40 years, this is the system we're living on. Again, founding fathers would be rolling in their graves if they knew this was the system we were using. But it's been the story of history. For the past 5,000 years of history, you find the same saga over and over. It really, I would say in the 80s, it went full bore, like it went into fifth gear. We had the consolidation of the commercial banking system. It did, I would say, sort of the pinnacles. 1971, Nixon closed the gold window, even though the Americans could no longer turn in their dollars for gold long before that, but foreign countries could come and exchange the US dollar or Federal Reserve note for gold prior to 71. And that's how the US sort of became the reserve currency. Nixon then really made a deal with the Saudis, or to have it be, have oil trade in dollars. And that's what really also then made the US be the core standing, of course, backed up by the military. So what really backs the US dollar in the US system is the military. It's probably why we have bases everywhere. Is that getting ready to change? Probably. Will that be dramatic for the US? Absolutely. So really big stuff. But very importantly, no, on a relative basis, this system is new and it's incorrect. And it's one of the reasons why we have such confusion, fracturing of our society, disillusion, despair right now. It's the hidden problem. The problem, even though it looks like it's political or economic, did the Fed start too late raising interest rates? Are they doing too much? Is it social? These are symptoms of the problem. It's monetary. Money should never, never, never be issued as consumer debt. And the big thing, which is what you're pointing to in the question, is that I will tell you, money today as a separate entity, other than coins or other things that we're using as money, like gold or Bitcoin or whatever, money as dollars in our account does not exist. That is someone's debt. It's someone's debt. So you think about a quarter, there's a head side and there's a tail side. When we look at money in our accounts, we have the head side of the quarter, but it actually really is someone's debt. So like a yo-yo, every dollar circulating has an expiry date, that when that mortgage is due or when that debt payment is due, it's going to get pulled back. It'll repay the principal debt and then it's destroyed. And that's why every man, woman, children, city, town, state, business, government must be in debt, and constant debt, like the hamster wheel. We think that if we paid off debt, there would be more money. There would be less. There would be less. No debt, no money, because they're one and the same. And this to me is the most shocking premise. It is what drove me to write the book, because when I saw this, I was heartbroken. I think I was literally depressed for like 9 months, and I've always sort of been a happy person. And, I think this was 2009, where I just remember I was walking like downtown Boston and I was just sad. And I was thinking, my goodness, there's no way interest rates can rise again. And if they do, it'll be a tremor that we're close to the end. And
close to the end of what? This is because they're rising.
Yeah, right. I know, close to the end of the system, getting ready for another iteration of the system. And sort of maybe the last part of that question is, yes, we're on the seventh new sort of form of money that we've used in America. So probably from the 1600s, middle 1600s, we have had 7 significant changes to our currency system.
I want to. There's a lot in there, but I want to focus on. You said that's the end. Tell me more, and what's the solution to not be the end?
Yeah. So this is the big thing. There is a tremendous solution, and this is why all the scary things that we look at are actually wonderful. It's just perspective, and then also knowing that there is a wonderful solution. That, now I say we are like the baby chick in the egg, and even though we feel like our structure is breaking down, or we're even pecking away at what kept us safe, we have no idea the glorious world that's waiting for us outside the egg, right? So I do believe this is where we are. The problem that happens when you think about it, when you create money as double book entry, so it's worse than saying that the Federal Reserve just creates fiat out of nothing. Now, of course, they have the golden keyboard. There's no point in auditing the Fed because the Fed's balance sheet doesn't count. Our balance sheet counts, state balance sheets, corporate balance sheets count. But the balance sheet of the Federal Reserve, they've got the golden keyboard, right? And, especially since the dollar has been the world reserve currency, when we create our debt out of money that we create, we always can create debt and simply pay it off. Weimar Germany got in trouble because they borrowed their debt in someone else's currency, right? And that's pretty much the story of Africa as well. There's more nuances to it, but in general, that's one of the reasons why we've been able to be as bravado as we've been. But the system that we're on is that we're using bank credit, meaning that the money in society, the money that actually drives the economy for real people is someone else's debt. And if people fall off that hamster wheel and they don't borrow, spend, earn, repay, borrow, spend, and speculate, then like the movie that Sandra Bullock did, Speed, in the middle 1990s, where we've got the gas to the pedal there, we have to keep constantly borrowing and repaying, or the system explodes. So the problem that you have with this is exactly where booms and busts come from. They are not a normal part of the economy. Ebbs and flows are a normal part of the economy. But when you look at the dot-com bust of 2001, the big mortgage blowout of 2007-8, and, sort of the problem now, right? The problem that the powers that be, and this is just how the system is. I'm not saying that these bad guys are doing it. When you create this, everybody is stuck in this hierarchical system of pain. And so you have to create an asset class that you can expand or blow up, inflate. So dot-com bubble, housing bubble. And then this is what creates pernicious deflation, or the drop in interest rates, because since we're repaying the debt in little monthly payments, you have to keep it small enough that the payments to continue the bubble being able to be expanded, that the income can still run faster than the debt payments, right? And so the cause of 2008 was not banks creating too many loans or creating loans to lower quality borrowers. Again, symptoms. What the match on the haystack is that the borrowers ran out of ability to take on more debt. And that creates the implosion always. So seeing where we are, where this is the first time that they've created inflation, and this inflation, in my opinion, absolutely was created. And it doesn't come from the Fed being irresponsible, because the Fed created a boatload of money during 2008 to 2011, or whenever QE stopped. And we had deflation. Interest rates went down. I struggled to find normal, good paying bonds for clients of high quality, and all these kinds of things. Municipal bonds were in the past 3 years. This is the first time they've really bumped over 4%. And so where did this inflation come from? Well, number one, it's the first time in history they sent helicopter money directly to the people. And so that money was created from government debt. And then, of course, likewise, they turned off supply. So they shut down all the small businesses, the supply chain stopped. So this is real inflation. And you you have a really hard time of fixing this, because when you tighten interest rates, you make it worse. So I do think we're seeing the tremors, but I also believe that the powers that be that understand all of these money mechanics, this is the main reason why they've been preparing with the central bank digital currency. It's not that really sort of the solution would be to go back to, okay, great, interest rates are lower, the dollar remains the reserve currency of the world. No, I think the solution that's been planned is bringing in global central bank digital currencies instead.
So that what you can go directly to the consumer, because that's really what the central bank CBDCs, central bank digital currencies. Most people think it's it's an attack on crypto. It's actually not. It's an attack on the banks. It gives the Fed direct access, or the CCP in China direct access to the consumer. But they're not without risks, because they're it's a very nanny state money, because you're able to program it and write whatever logic rules into it that you want. So then a government can easily discern whether, let's say, Kristen is a great citizen of the party, right? And I know in the US it's like a shocking thing, but this is what's going to happen. She's a great, and I don't believe in, I want to speak out against COVID and masks. Now I'm no longer a good citizen. Cut me off of whatever I want to use my money on. And by the way, for those listeners who are listening to this and thinking, oh, like this guy is a kook, this is an opinion, this is, conspiracy theories. We've had this in Canada. We had actual Canadian truck drivers that were protesting against, COVID and mask rules. And the government literally went without a subpoena and without court orders, and not a subpoena, without court orders, shut down their bank accounts and the bank accounts of people who donated to them. So that's going through the bank. On the CBDC, you can just do this directly. You don't need to even, go and ask for a bank to do this. You can just shut someone's money off. And that's a world that I think many people, it's such a unknown. We don't know. We don't even understand that this can actually happen in a democratic, capitalist first society. I mean, I hope it doesn't happen in the US. I'm pretty bullish on the US that we tend to figure this stuff out because of our values. But Canada is no, third world country. There's no Nigeria, Venezuela, with all the due respect to those countries and those people. I mean, this is a first world G7 country, and they did this. Right. So
no, I mean, it's happened throughout history. It's naive, if it's distasteful, I think we just have to have a broader, desire to think, because it's truly naive not to have these conversations. And in the United States in the 1930s, the government confiscated the people's gold.
Yeah.
So, I mean, it's absolutely happened here, and not so many generations ago. A few years ago in India, they demonetized the 500 rupee note within 30 days. Mm-hmm. And I've spent a decent amount of time in India, so I was even left with, 10 of them in my wallet that turned into paper. So no, this has happened over and over and over and over in history. This is actually what history has been. So it's just on our doorstep again. That's the change. And, I think our generation, or at least in the past 50 years, we've had the benefit of, there was really investment capitalism and industrial capitalism in the United States from the wars through to the 70s and 80s. So for the last few years, we've had the benefit of not really being close to a lot of the broader history that's been in the world. But it's absolutely, New York State is in the pilot program right now with the CBDC with most of the major banks. We know that it's been unrolling in all different places. Now, it could turn out to be a host of different things, but it's important to ask what it is. Why would we need it? In essence, money is digital today. When we move money in our accounts, we're moving digits around. So why do we need a central bank digital currency? Is it really for more inclusivity, for the unbanked, for all the other kind of social inclusivity reasons that we hear? We could have post offices that became banks again. Post offices in the United States used to be banks. And you certainly would reach all the people that don't have access to local Bank of America branches that way. So there are a whole host of of solutions. So are we just getting one dialogue? The main problem, of course, with the CBDC, if in fact it goes the route of sort of a tyrannical perspective, in the sense that we all have an account with the Fed, and the Fed decides for climate change or for some type of quota reason that your bank account is turned off. The main problem is that it's just the monopoly, right? And so this again is the age-old issue. Coin money actually started this way. So many people think coin market started from markets and from capitalism. It didn't. It started actually from kings who wanted standing armies like of 100,000 men. And they had no idea how to take care of the big armies of men. So they created an income tax. And they created the income tax with a scarce coin. And it was a sole monopoly that all the people had to earn the coin in order to pay the tax. And the only people who were paid the coin were the armies. So the markets migrated to the armies got taken care of, the people got their singular monopoly coin that relieved the burden of the tax. Okay, so that's this. It's been the same story over history. Mm. I don't think we're going to, if that's the plan for the CBDC, I don't think we're going to stop it. I think it's going to come everywhere. And I'm not so sure that it's as terrible then as it sounds, because what I do think would happen is we'd have a massive crushing of the expansion of capital, because commercial banks probably wouldn't be able to issue capital, which is the basis of capitalism. That would be quite disruptive. So other people will come up with new ideas. The most important thing is that this is going to rebirth Wildcat Banking 2.3.0. And so what that really is the idea, again, of corporations issuing money. And when the gold standard was instituted in 1900, and there was a battle for probably 70 years that I know of prior, where the people said, if we lose silver as the money, we're going to have such an oligarchy, such poverty, such a hierarchical control over the U.S. that there was a famous speech, "You won't crucify me on a cross of gold." So in the 1800s, banks and manufacturers and companies started issuing script backed by their production. But nobody could prove its legitimacy because they did not have the blockchain systems. So if CBDC comes down the pike and they link it to things like quotas on how much spending you can do, there is a credit card out of Sweden, I believe, called Docotomy, which already is turning off people's access to their capital based on their carbon spend. And it's my understanding that Microsoft is working with them to create something similar here. Again, that's going to be the channel that goes. So the whole beauty about invention is that once you bring in blockchain into the mainstream, other people start using other blockchains for other reasons. And this is going to open up the multitude of adoption of production-backed money.
So do you think the money would then accrue to a Bitcoin or a Amazon coin, Microsoft coin, Apple coin, and GE coin? And I think there's an implicit argument there. You said that CBDCs will actually accelerate corporate controlled and corporate created money, because it will essentially disintermediate the banks who have the job of doing it now.
You talk about a prehistoric depression. I mean, like beyond, like it would be the end of industrialism, because there would be no ability to expand capital. Anybody right now can use a credit card or go to a bank. The amount of reserves that the Federal Reserve creates does not control how many loans banks. Fractional reserve lending really doesn't exist anymore. I mean, that I have to honestly say that's sort of a gone thing.
How so?
It's like the first 20 million in loans don't require reserves. Banks still need to.
So you're saying we're under fractional reserve. We're not just fractional reserve. We're just making stuff up.
Yeah, it's a misnomer. Reserves, I think, are still needed more for balancing check cashing between amongst the banking system. But we still sort of believe that, oh yes, they have to have 10%, on the books in order to create $1,000. This is nonsense. That's fairy tale stuff. So as long as the banks are solvent, meaning that they have 8%, they have $8 of capital per $1,000 of loans, they can create endless loans. And the loans are still not created out of thin air. They're created when I promise to pay it back. So every debt or all the bank credit that the banks create are created from when we legally promise to pay that money back, then they create it. And of course, there's no money in the bank. Their reserves are sort of a non-consequence. Banks have 30 days, 60 days to balance their books. If they can't get reserves from other banks, they get them from the Fed. This is again sort of the shadow,
Sure.
right? So if we were to simply go to everybody, the banking system collapses, the dollar no longer has dominance because commodities are settled in other currencies. Russia and other countries are now no longer using the SWIFT system for checking. They have an alternative system. So the US sort of can't just create this debt out there like they could. Although I will say that I remember during the Great Recession, I think it was Russia who said, listen, we aren't going to take treasuries anymore. And we didn't see a blip in the price of treasuries because JP Morgan, I think, opened a boutique firm in Belgium and started buying up all the treasuries because, again, the Federal Reserve is a golden keyboard. And these commercial banks really act as the proxy for the Federal Reserve. So they can tighten up the treasury whenever they want to. But in any case, if the dollar were to lose its dominance and it created such disruptions that the solution was, don't worry, we're going to make your currency safe by giving everybody X amount of CBDCs instead of set Federal Reserve notes. And don't worry, you don't have to worry about the safety of your bank anymore. You're going to bank directly with the Fed. But now the Fed journal entries in your taxes. Now somebody turns off the access to your capital. It sounds really grim. I do believe it's the mother of invention because capital would be crushed. And I'm not so convinced that the spirit of this country, which the optimism of the American people is in dreaming ideas and putting them into action. It's pretty hard even to take 7 or 8 billion people around this globe of the glory of beautiful ideas flowing through them and to not have them come up with another way of exchange.
So what do you, as we kind of start wrapping up here, what's the positioning that, maybe tactical positioning that investors should take? I know this is not financial advice, but just from your reading of the tea leaves, how soon do you think this will happen? And, if I want to hedge for this, what should I be buying gold? Should I be buying Bitcoin? Should I, I don't know, go out and YOLO my savings away?
Yeah, right. It's really sort of hard to know, because when you talk about this, we're, like if we're talking about traditional investment on a clock, we're between 11 and 1, pretty straightforward, right? And when we talk about these kinds of massive dislocations, we're talking about like from 7 o'clock to 5 o'clock. We're on the periphery. And we have seen extraordinary things happen. I think a really good rule of thumb is to always be diversified, because if we have a little bit in everywhere, we're not going to be wrong everywhere. But the most important thing, and this is the empowerment piece, and this is what every single monetary vision and monetary reformer throughout the past 5,000 years would get on the Hill and preach, is that wealth is in us. Wealth is actually inseparable from our being, no matter how wonderful the system is or how misguided the system is. If the system is empowering or if the system is actually for control, because the control power is afraid of losing control. You look at it, the hierarchical systems that we've had in the past let's even just say 1,000 years, still has provided a level of stability, right? It hasn't all been bad. We all like a level of stability in our life and things that we can count on. It's just that we're ready for now a new expansion. So the old power structure is saying, wait a minute, hang on a second. How do we still stay in control? Or how do we make this? And so they maybe have a limited point of view. For us, and even to help them, if it's really everybody, the number one understanding is, what is wealth? Number one, it's all of our passions, it's our imagination, our skills, our know-how. It's all the glorious resources on this abundant planet. It's every single thing that we buy money with, that we use money to buy. And no one could really stop you from creating these shows. Even if you were tired or you had to put it on hold, it would still come back to you, right? And this is what is alive in humanity. And this is actually the basis of money. So money we created then to say, wow, how can we exchange our gifts and services better with one another? So number one, people really need to get in touch with that we are much more powerful than we seem. We've been indoctrinated to believe money is outside of us. We need to get it first to access our wealth. It's the opposite way around. We need to reteach ourselves that in communities and in exchange circles, we have all the power in the world. And we have the ability to, which cryptocurrency has been this beautiful thing to show us, we have the ability to actually create money systems peer-to-peer. And now what I think we're going to really come face to face with, that as we come close to the idea, really reteach ourselves, wealth is inherent, inseparable from us. We have to really also nurture our circles, whether they're virtual, our communities. Everyone should reach out and go and find their food source, their farmer in their community, no matter how busy they are, some type of core producer in their community, and get behind them already in building the prototype of these exchange circles. Because when we do this, then bless the CDC, BC, let it come and let it do whatever positive it will do, but we will always have the democratization of creating legitimate money. And that retains and anchors the power in society, which then returns the rule of law to people forever. So
Yeah.
it's in that nuanced point where the pathway for freedom is.
So one last question, and then I'd love to understand or to tell folks how they can reach you, because this is very interesting and a great different angle on some of the same topics that most people, especially in the crypto space, talk about. But very specifically, Bitcoin, winner or loser in this world?
For me, it's a winner, right? It doesn't mean that it couldn't be completely speculative, lose its value, become $1 million, like who knows, right? But for me, it's a winner. The difference, I think, fundamentally is that Bitcoin is still not money. And I know that sounds heretical because when I read the Bitcoin paper in 2009, I loved it. But I understood so firmly that money was supposed to be something with no intrinsic value, like the equal sign. So if we were given a test of 100 equations and they said, solve them, see how many solve, and 70 of them solved, we would not have to dig up equal signs. They would appear. So if two people are making an exchange, we don't need gold rocks or Bitcoin to make that exchange. Money, as it should be in existence, in and out of existence, equal to the real production, the trading capacity. Now, to me, Bitcoin is absolutely a store of value. And it's a store of value because of its scarcity, right? And its provable scarcity. It has, in my opinion, an intrinsic value based on its scarcity, the community, the technology that backs it. So I'm still in that camp. Do I think that Bitcoin could be banned, dysregulated? Yes, of course. Will it happen? In my personal opinion, I'd be surprised. And even if one government gets rid of it, I think another government would pick it up. And then in the worst case scenario, so let's create the most draconian point of view, total, global government comes, these, highly restrictive tokens, so on and so on. It's very easy to remove Bitcoin from the market without having to get rid of it. Because you can use it as a store of value. And let's say the price goes up and up and up and up and up, but there will be at some point, some holders who have it will have to use it then. If there are only CBDCs in existence and Bitcoin, somebody's going to have to use it for rent or gas or food. And then as it begins to circulate, it can be just taken off the market by those people with more money, right? So that's the problem with creating money through the mechanism of scarcity. It doesn't work, but it can become and maintain a phenomenal store of value in the meantime. What will happen is that stable coins linked to fiat, I think, will be replaced by production-backed, market-driven, people-driven stablecoins. Producer credits or production-backed money will replace and legitimize real stablecoins. And the big reason why they would do that is that if farmers issued them, or Amazon or Apple, if they issued too few, those people holding the tokens would have the profit because those tokens would be worth more. So the corporation would have to spend more to bring those tokens back to parity. If they issue too money, they're going to lose their ability to have people buy them. So they have to buy them back up to keep it at parity. And so the system has a natural check integrated in it.
I love this. There's so much here. Tell us how people can find you, and then we have to have you back on the show. As you talk, I want to give you the air, but I'm thinking there's so many. We could talk about fractionalized reserves or fractionalized lending and lack thereof. We could talk about in a case where you have this case of production based coins or tokens. Well, how do you actually have a stable store of value, assuming the Bitcoin's volatility will have not shrunk by that time? If it has, then you have a stable store of value. Then we can talk about self-custody versus not. There's just a lot here. I'm sure we can spend hours, but how can people find you if they want to learn more, if they want to read your book? Just tell us a little bit about that.
The best place is probably just to come to my website, which is KristenRagusin.com, KristenRagusin, or theendofscarcity.com. Both takes you there. I will say the book is so helpful. It's still, when I read it, even though, my God, I wrote it, I learn from it, because our indoctrination is so intense, and we're being taught the opposite, and we're being reinforced the opposite every day. So the book is everywhere: Amazon, Apple, Barnes and Noble, and it's also on the audio version now. I hope to have a cartoon version later this year, and maybe do some courses, give them to schools. And I also hopefully will have a few modules for people who want to go deeper. There's a group on Facebook that you can join through the website for communities who want to begin to create this themselves. And I hope to have also resources coming out as we have all these monetary big changes coming, to say, hey, guess what? Might look scary. Here's our tremendous opportunities. And we get to bless everybody instead of really encouraging to think that we have enemies out there. I think it's a limit of imagination, and everybody sort of gets stuck one way or the other. And we need each other to create a beautiful future. So
I love this. What a positive message. And look, it's, folks, it's $10 on Amazon. That's your coffee and a half. So, skip a coffee, skip the caffeine and sugar, and educate yourself. I think that's probably a much more worthy cause, investing in yourself, versus in the Starbucks token that's soon to come. By the way, Starbucks is actually doing this on Polygon. Their loyalty rewards program is actually going to become to go on a blockchain. Polygon is a layer 2 on Ethereum. So it is actually happening.
It's totally happening. This book was coming through me. I would wake up and be like, I'm too late. And then I'd be like, I'm too early. So it's usually careening one or the other. We're probably right on time. The book is also written like an adventure story. So it came through in a very fun way. This is the third iteration of how I had personally written it. So people tell me they can't put it down, and which is shocking for a money book, except for maybe like us in this community. But it's the information we needed in kindergarten. This is what we should have been taught when we were learning that 2 + 2 was 4. So yeah, it's such an exciting time. We just need to keep supporting one another. Yeah.
Kristen, thank you so much for coming on the show. We need to have you back. End of Scarcity on Amazon. Better well served than your cup of coffee. Go pick it up. It's $10. And it's just a great way of rethinking about the world. Again, thinking about money investments as from an intentional perspective, and this idea that money isn't money. It's actually created money out of debt is it's an important idea to understand. I think even from finance professionals. I mean, we have people here that are executives that are listening to the pod, but like you said, it's not taught and we're indoctrinated. And this is why I think a lot of people have issues with Bitcoin, because they don't fully. Charlie Munger, right? 99, one of the greatest investors ever, has issues with this because it's hard to really get your head wrapped around this. Thank you so much for coming on the show.
Oh, thank you. It was totally my pleasure.